Most people think the crypto bear market started in October 2025. They're wrong. There is one chart, that has been bleeding out in silence since December 2024. Not Bitcoin, not Ethereum, not XRP. Something far more revealing, far more important, far more damning. It's called the Others chart, and it has been in a bear market for 455 days. And counting. That's not a typo. 455 days. By the time this video is over, you are going to understand exactly what that means, why it matters, and most critically, what to watch for that could signal the end of this suffering. Welcome to Schooled by Market. The market is teaching. Are you listening? My name isn't important. What is important is the chart sitting in front of us right now. Before we go any further, let's get one thing straight. The Others chart, officially labeled as the crypto total market cap excluding the top 10, is not some obscure, irrelevant indicator. This chart is arguably the single best barometer of retail participation in the entire cryptocurrency market. Think about it this way. Bitcoin, Ethereum, XRP, these are the institutional darlings. The blue chips. The coins that end up in ETFs and on the balance sheets of hedge funds and corporations. But others? Others is you. Others is me. Others is the everyday crypto investor who bought into the altcoin dream. The person who piled into small cap tokens chasing 10x, 50x, 100x returns. And since December 2024, that world, the retail world, has been in a prolonged, unrelenting, historically unprecedented bear market. Today, we are going to do three things. One, we're going to understand how we know this bear market started when it did, using a specific technical signal. Two, we're going to look at the past two bear markets, compare them to today, and understand what conditions historically signal that the bottom is in. Three, we're going to talk about what you need to watch right now in the coming weeks to know whether the worst is behind us. This is technical analysis. This is market history. And this is absolutely essential viewing if you have any money at all sitting in altcoins. Let's get into it. Let's start from the very beginning. How do we even know where the top was? This is where technical analysis earns its keep. On the weekly chart of the Others index, there is a pattern that has repeated itself 3 times in crypto history. 3 times. And every single time, without exception, it has signaled the top of the market. It's called a bearish RSI divergence. Let me explain that in plain language because this is important. The RSI, the Relative Strength Index, is a momentum indicator. It tells us how strong the buying pressure is behind a price move. When price goes up, you would expect RSI to go up with it. The price is rising and the momentum behind it should be rising too. But a bearish divergence is when something disturbing happens. Price makes a higher high, but RSI makes a lower high. In other words, the price is going up, but the engine driving it is running out of fuel. The crowd is still buying. The chart still looks bullish. But underneath the surface, momentum is dying. And historically, on the Others weekly chart, this divergence has only occurred 3 times. January 2018, price made a higher high. RSI made a lower high. The market topped. What followed was one of the most brutal crypto bear markets in history. November 2021. Same signal. Same pattern. Price higher. RSI lower. Market topped. Another devastating bear market followed. December 2024. It happened again. 3 for 3. This indicator has never failed on this chart. And that, right there, is how we know the Others chart topped in December 2024. Not because of a gut feeling. Not because of a tweet. Because the chart itself gave the signal that it has given every single time a major top has been reached. What followed was the bear market we are living through right now. And here's what makes this one uniquely painful. What makes this the bear market that demands your attention? This current bear market has now lasted longer than any previous others bear market in recorded crypto history. In addition to that, the top in December 2024 did not make a new all-time high. Let that sink in for a moment. To understand where we might be going, we first need to understand where we've already been. Let's go back to the bear market that started after the January 2018 top. This is where it all began for most crypto investors who went through their first real winter. With the benefit of hindsight, we know the bottom arrived in December 2018. Here are the facts. Cold, hard, statistical. From top to bottom, it took 47 weekly bars, approximately 329 days. The drawdown from top to bottom, 92%. If you had put $10,000 at the January 2018 top of the others chart, by December 2018 you had $800 left. The RSI dropped below 35. The stochastic RSI was deep in the bearish zone. And critically, price had fallen all the way to the 260-week simple moving average. That's roughly the 5-year moving average. Now here's the question that matters. If you were living through that period in real time with no hindsight, how would you have known the bottom was in? This is where the early warning signals come in. And they are the same signals we need to watch for today. The first sign was price holding key support. In early 2019, the others chart began to consolidate around that 260-week SMA. It stopped falling. It started stabilizing. The second set of signs came from momentum. The RSI climbed back above 35 and crossed above its own moving average. The stochastic RSI exited the bearish zone, meaning it crossed above 20. And the MACD, the moving average convergence divergence, flipped green. We got all three of those clues together in late January 2019, approximately 2 months after the actual bottom had already been set. That's the nature of market bottoms. You almost never catch the exact low. What you can do is catch the confirmation, the signs that say, the worst is probably behind us. The tide is turning. Now let's fast forward to bear market number 2. The bear market that followed the November 2021 top was, in many ways, even more devastating. With hindsight, the bottom arrived in December 2022. A full year of pain. The statistics tell the story. From top to bottom, 59 weekly bars, approximately 413 days. The drawdown, 86%. Slightly less catastrophic than 2018 on a percentage basis, but still devastating. That same $10,000 investment, down to roughly $1,400. The RSI once again dropped below 35. The stochastic RSI once again went bearish. And this time, price found support at the 364-week SMA, the approximately 7-year moving average. The recovery signals were familiar. Price began consolidating above the 364-week SMA. RSI recovered above 35 and its average. Stochastic RSI climbed back out of the bearish zone. MACD flipped green. But here's what's remarkable about the 2022 bottom versus 2018. We got the confirmation signals much faster. In the 2021/2022 bear market, those momentum clues arrived just 2 weeks after the actual bottom. 2 weeks versus 2 months. The market was giving us the signs almost immediately. So now we have a template, 2 historical data points, 2 bear markets with remarkably similar fingerprints. Both had RSI drop below 35. Both had stochastic RSI go bearish. Both found price support at a long-term moving average, the multi-year SMA acting as the floor. Both recovered only after momentum indicators confirmed the reversal. Now, the question is, does today rhyme with the past? Let's talk about today. Right now, this very moment in time. The others chart has been in a bear market for 65 weekly bars. That is approximately 455 days. the longest bear market in others' history. Now, if we make one critical assumption, and it is just an assumption, not a certainty, if we assume that February 2026 marked the bottom of this bear market, here is what the data shows. From top to bottom, 60 weekly bars, approximately 420 days. The drawdown, 66%. Notably, this drawdown is actually the smallest of the three bear markets. 92% in 2018, 86% in 2022, 66% today. On the other hand, we have the longest bear market. Lengthening duration but volatility compressing. This makes sense for a maturing asset class. But here is what's also notable, and this is what makes the current cycle uniquely troubling. The top of this cycle did not exceed the prior all-time high for the others chart. In every previous bull market, others smashed through its previous record. This time, it didn't even reach it. That is a structural weakness. That is the market whispering something important. And yet, there is hope. Because right now, price is holding on to the 364-week SMA. The same long-term moving average that served as the floor in the 2022 bear market. Price is sitting on that support. It's not collapsing through it. That is the first early sign. It is not confirmation. Let me be absolutely clear about that. It is a necessary condition, but not sufficient on its own. We have seen this indicator before. We know the pattern. Price holding the long-term SMA is step 1. We are still waiting for steps 2, 3, and 4. The RSI has not yet crossed back above 35 and its moving average. The stochastic RSI has not yet exited the bearish zone above 20. The MACD has not yet flipped green. Those are the signals we are waiting for. Those are the signals that historically have told us with some confidence that the worst is behind us. They haven't come yet, but if the past is any guide, they may be coming soon. There is one more dimension to this story that we cannot ignore. This bear market has not affected all cryptocurrencies equally, not even close, and understanding why will fundamentally change how you look at the crypto market going forward. Matt Hougan, the chief investment officer at Bitwise, one of the most prominent crypto asset managers in the world, wrote about this in February 2026. His conclusion was striking. He divided the crypto market into 3 groups and looked at their performance since January 2025. Group 1, Bitcoin, Ethereum, XRP. These are the institutional assets, the ones with ETFs. The ones that have been sitting on corporate balance sheets. Since January 2025, this group fell between 10% and 20%. Painful? Yes. Catastrophic? No. Group 2, Solana, Litecoin, Chainlink. These assets got ETFs approved in 2025, but only in 2025. They had institutional support, but it came late. Since January 2025, this group fell between 37% and 46%. That is a significantly deeper wound. Group 3, Cardano, Avalanche, SUI, Polkadot. No Wall Street money flowing in. Just retail. Just hope. Just speculation. Since January 2025, this group fell between 62% and 75%. Read those numbers again. 10 to 20% versus 62 to 75%. The assets with institutional buy-in were essentially cushioned from the worst of this bear market. The assets without it, annihilated. And this is precisely what the others chart has been telling us all along. The others chart represents the market cap of everything outside the top 10. It is the heartbeat of retail participation. And that heartbeat has been dangerously faint for 455 days. The takeaway here is uncomfortable but important. The era of every altcoin rising together on a rising tide may be changing. The market is becoming more selective, more institutional, more bifurcated. The winners are being chosen not just by technology or community, but by which assets Wall Street has decided to support. The market is teaching us something here. The question is whether we're listening. So where does this leave us? Let's be precise. Let's be honest. And let's be realistic. Historically, the others' bear markets have lasted between 385 and 427 days. We are currently at 455. We have already exceeded the historical range. That means one of two things. Either this bear market is already past its worst, and we are in the process of bottoming out with February 2026 potentially marking the low, or this time is genuinely different. This time, the bear market is extending beyond anything the historical record has seen, and there is more pain ahead. Can the price get worse? Of course it can. No one, not me, not the best analysts in the world, not the Bitwise CIO, can predict the future with certainty. If we do see further downside, the next levels to watch would be the 416-week SMA, the 8-year moving average, and beyond that, the 520-week SMA, the 10-year moving average. Those would be the next logical floors. But here's where I land personally, and I want to be transparent about that. The current state of the others chart rhymes strongly with the past two bottoms. The 364-week SMA is holding as support. The drawdown stats are consistent. The RSI has dipped below 35 just as it did in prior cycles. The stochastic RSI has been in the bearish zone just as it was before. All the preconditions for a bottom have been met. What we are waiting for now is confirmation. And in the coming weeks, here is exactly what you need to watch. 1. The RSI crossing back above 35 and above its own 14-period moving average. 2. The stochastic RSI climbing above 20, exiting the bearish zone. 3. The MACD flipping green. If and when those three things happen together, watch out, because historically that has been the green light. The signal that the worst is over and a new chapter is beginning. Let me bring this all together. The others chart, the crypto total market cap excluding the top 10, is not just a technical indicator. It is a mirror. It reflects the state of retail participation in the crypto market. And right now, that mirror is showing us something historically unprecedented. For 155 days of a bear market, the longest ever recorded, a top that failed to exceed the prior all-time high, a cycle that underperformed its predecessors, a brutal divide between assets with institutional support and those without. And yet, the chart is holding its ground at a critical long-term moving average. The conditions that have preceded bottoms in the past are present. The setup is familiar. Now we wait. We watch the RSI. We watch the stochastic RSI. We watch the MACD. And we stay patient. Because the market is not emotional. The market does not care about our feelings, our portfolios, or our hopes. But it does leave clues. It always leaves clues. And right now, it is leaving us clues worth paying very close attention to. If you found this breakdown valuable, and I think you did, then do 3 things for me right now. Hit that subscribe button because more analysis like this is coming. Hit the like button because it tells the algorithm that this content deserves to be seen. And hit the notification bell so you don't miss the next video, which could be the one that tells you the momentum indicators have finally confirmed the bottom. You do not want to miss that video. This is Schooled by Market. The market is teaching. Are you listening? Thanks, and I will see you in the next one.